Hello, everybody. All right, well, let's get started here. My name is Andrew Dix. I am the founder of the Crowded Media Group. We're the publisher of Crowdfund Insider, and we cover the full stack of fintech innovation, including online capital formation or investment crowdfunding. And I would like to welcome everybody here to a webinar on securities crowdfunding and compliance. And this is a subject that is near and dear to me because I find it fascinating. But not only is it fascinating, it's very important. But before we get started, I have to say a thank you, give a big shout out to our sponsors who are making this event possible, including Prime Trust. Looking at you, Nirvana. Rialto Markets, thank you, Jim. Dalmore Group, and everybody else who is helping out. So we're not here today to listen to me. We're here to listen to experts because we have 4 experts here. I'm the guy who, listens to what they say and hopefully, get it right when we write about it. And I'm going to ask each of our panelists to kind of go around the horn and tell you who they are and what they do and what their platform does very quickly. And we're going to start at the top here with Nirvana and just go around the circle. So Nirvana, why don't you go for it?
Great, thanks, Andrew. So just a little bit of background on Prime Trust. We provide financial infrastructure that connects portals, issuers, investors, broker-dealers, and among others. And so more specifically, we provide APIs and widgets to platforms and issuers to manage offerings, and we also serve as a qualified third party by holding investor funds and dispersing to issuers. And at Prime Trust, I'm the Chief Compliance Officer, oversee the compliance risk management and financial crimes compliance across all of Prime Trust products and services. Excited to be here.
Awesome, yeah, Prime Trust, you guys are like the one. You are the gears and machinations in the background that make this entire industry run. So thank you for what you do. Let's jump over to Jim.
Hey, good afternoon. Jim Caboy, Chief Compliance Officer, Rialto Markets. Rialto kind of takes what Nirvana provides so that we can facilitate these offerings and operate that back end and infrastructure. And we take in the investment subscription documents or the investment agreements. We review them. We check out the investors for AML, KYC. We'll handle the funding. We use those escrow accounts Nirvana provides and help disperse those funds once everything is closed. So we try to make sure, or what we do is we make sure everything is compliant while we're conducting the offering for the issuer.
Awesome. Thank you very much for that, Jim. Doug.
Andrew, thanks for having me and your consistent focus on crowdfunding since its inception in 2012. I'm a securities lawyer. The firm's been around for 30 years, and we've helped entrepreneurs establish and expand a variety of alternative finance programs, including crowdfunding, going back to 2012, SPACs, PIPEs, registered directs, ATMs. And we appreciate the opportunity to talk about the importance of compliance in this space.
Awesome. Yeah, and I have to mention that Doug was here from the very beginning, or actually before the beginning. So he's one of what I would call a founder of the industry. I mean, he's really played a critical role in getting this all going, and he's very modest about it. But we're very fortunate to have him here today. And then last but not least, I'm going to ask Sara to do an introduction. And Sara is another foundational individual for this industry. She's been here before the beginning. So, Sara, please tell us about yourself.
Yeah, well, it's been 10 years now. I can't believe it. It's been 10 years since I met you and Doug. I am CEO of CrowdCheck, managing partner of CrowdCheck Law, and the two between them provide a wide range of legal compliance, filing, and diligence services for all of the Jobs Act exemptions, Reg S, Reg D, Reg CF, and especially Reg A. Thanks.
Awesome. Okay, so as Doug mentioned, securities crowdfunding was legalized under the Jobs Act of 2012. While it took a bit of time for the SEC to approve everything. We're now, full at it. And the Jobs Act created or altered 3 exemptions specifically: Reg CF, regulation crowdfunding, that's probably the one that's known the best, Reg A plus, and Reg D 506C. Each one of these exemptions enable online capital formation, meaning you can promote a securities offering online, hence crowdfunding. Last year, the SEC did something very good. They reviewed the exemptions and they made some significant improvements. Reg CF took a somewhat anemic funding cap from $1.07 million to $5 million. And as many people know, seed rounds today frequently go above $5 million, so that made a lot of sense. And this is helping to fuel sector growth. Reg A Plus also got an improvement where that securities exemption was boosted from 50 million to 75 million. At the same time, people are starting to figure things out, and the velocity is picking up for this industry. So we're going to start, we're going to go through each one of these exemptions one at a time. And then at the end, if there's any questions, we're going to open it up for questions. But I want to start with Reg CF, the smallest exemption. And I wanted to start with you, Nirvana, because you're the one that makes everything run in the background. And if you could just kind of share, why is it so important that we have prudent regulation? Why is this key?
Sure. So certainly a loaded question, but I think at the end of the day, it's important for us to have regulations that are clear and insofar as they protect investors, prevent fraud, and I think most importantly, act as guide rails that allow the industry to responsibly grow. I think those are some of the most important points for regulation within this space. It also just allows people to continue to raise capital by non-traditional means, which this certainly was when it first came out.
Yeah, and I think it just builds people's confidence in the sector to have prudent regulation. Everybody needs to trust the system, and I think that's where we are, or where we're heading to. So for Reg CF, which is the newest exemption in many respects, Jim, you're actually not a funding portal, you're a broker dealer, but you can list securities under Reg CF, which is a nuance there. If I am an issuer and I want to raise money online on Rialto markets, what do I got to do to get my securities offering live on Rialto markets?
Sure. Well, when you come to Rialto, hopefully at this point you've worked with the prep services or your securities counsel to understand what you actually want to do, how far you want to go, and get your filing in order. Once you file the Form C, we go live. But before that, we've got to perform due diligence on you, the issuer. So you're going to need to provide me with enough information that I can clear you, bad actor questionnaires. Basically, we want to make sure you've never been in trouble with the SEC, or at least in the last 10 years, and that it's a real company, that you have real use for the funds, that you're not a blank check company, that you're doing something. And once we clear that and get you set up, then we'll onboard you and make sure that you have we'll create the website. So we'll work with you to make a website that's informative, but also informative from a compliance standpoint. All the disclosures are there, that there's information that these investors can actually learn a little something about the process as well. We field phone calls all day. Is this real? Why do I have a limit placed on me? Things around those lines. So we work with you to ensure that the website is working and that the back end will connect to something like Prime Trust Systems, so that we can actually run the offering.
Okay.
Paperwork. A lot of
paperwork. Important stuff. So Sara, Jim mentioned an offering document, and this is something that I believe attorneys typically work on, but I guess they don't have to. Is there a qualification process for a Form C, a Reg CF offering?
No, I mean the thing about Reg CF that distinguishes it from registered offerings or Reg A is that the SEC does not review, does not sign off in any way. They will just they've got the stuff on file in case they want to do anything about it later, in case somebody complains, or the state regulators can also look at that and keep an eye on them. The interesting thing about the whole Reg CF environment is that there's a number of platforms that are like, hey, no, you don't need lawyers for this. Here, fill out our little widget. And then we have clients come to us and go, yeah, but we didn't understand what this meant, which securities class has rights that can change the other securities class, and can you help us? So in an ideal world, you wouldn't need lawyers, but we don't live in an ideal world. And so we do think, obviously self-serving, we do think that lawyers should help the companies put the offering documents together. The SEC has been super flexible about the whole document assembly process. And so when you look at a company's Form C filing, you may find, if we've worked on it, it's just one document, and the investor can read it through, and here's the description of the company, and here's the financials, and here's the video transcript, all in one place. But you don't have to do it that way. And many of the platforms have it set up so that, there's Exhibit 1 and 4 and 9 and 10 and 11. There's so many of these things. How investors find their way through that, I don't know, but that is compliant. And it makes it sort of, easier to do a light touch as far as the whole document assembly process goes. But yeah, you don't have to have a lawyer. There isn't an opinion being issued. You can assemble all of the information yourself with the platform's help, but you should use a lawyer, right, Doug?
Yeah, I want to jump in there because I think that every investor should read the Form C offering document. They should do that, and my guess is most don't. I do at times. And I think typically you can tell the ones that have been put together maybe by the issuer, the company themselves, or one that's had a little bit of assistance from, say, Sara or Doug or maybe Rialto Markets to put it together. And I think that makes a big difference, in my opinion, because then you're crossing all the T's, you're dotting the I's, and even though it doesn't go through an approval process with the SEC, I think it's a better document. So this leads me to a question for you, Doug. Both funding portals and broker-dealers can list securities under Reg CF. What type of diligence or vetting does a BD or a funding portal need to do to get this live on the platform?
Before I do that, Andrew, is it okay if I just go back a little bit and give a little
Absolutely.
Absolutely. Because everything that Nirvana, Jim, and Sara said are spot on. We happen to be living in a very cynical environment at the moment where people don't think that they have to do things in a compliant way. But Reg crowdfunding was revolutionary in both my professional background and Sara's, in that this is an opportunity to raise money from retail investors, i.e. any American up to small amounts of money, in order to fund a startup. Since 1933, that was impermissible activity in the United States. And the reason for it is, prior to that, a lot of individuals were taken advantage of by, I won't even call them entrepreneurs, they were probably more charlatans than anything else. And along came the Congressional Act to create the 33 Act, which said you just can't go publicly raise money from retail investors. And so until 2012, that was the law of the land, and now that's been reversed. So it is an exemption from the way Sara and I typically practice law for public offerings, which this is a quasi-public offering, but it's an exemption, or it's a private placement exemption. It's a limited exemption that allows you to raise, as you point out, it was $1 million, $1.05 million. Now it's up to $5 million, because this industry has behaved well. notwithstanding a lot of the predictions that state and federal regulators had due to the hard work of everybody on this call and many other people. Entrepreneurs in many states where venture capital does not flow very readily can now raise money. And it benefits women and minority disproportionately in ways that's very healthy for the capital markets in this country. So in that context, Sara and I and Jim and Nirvana take this very seriously. And we want to see people do better than what they've been doing. Like Sara says, they just slap it together and get it on file. And luckily and fairly enlightened for the SEC, they haven't done anything about it. But what I always say to folks is if you want to raise money from people you don't know, then you ought to treat them as if they're your relatives and force the information on them so that they don't blame you later on when the whole thing didn't work out. And you feel good that you shared everything there is to know about the opportunity. The background that Jim and Nirvana talked about, yeah, you ought to make sure there's no bad actor background, which is required by law, but you should do some foundational searches on, Google and LexisNexis to make sure that the people haven't done other things that, whether you're a platform trying to protect yourself, but really to make sure the investors are not harmed. Because trust me, you raise money from retail investors, even if it's small increments, and don't use the money the way you're supposed to and fail, they're going to reach out to the SEC or state regulators because that's how they operate.
It happens.
What we're here to it does happen. It's happened very infrequently in crowdfunding. Again, credit to everybody on this call and everybody that Sara, Andrew, you and I worked with for 10 years. It's amazing. And so Sara and I in particular, looking at a lot of these Form Cs that are prepared and filed, are deficient in so many different ways, given what Sara and I are accustomed to. So and I love the word that Sara used to use, which is we need to reimagine how we deliver the material information to investors so they really know what it is that they're investing in. So that doesn't mean it should be slipshod. I am still shocked by how little people are willing to pay to actually present a marketable document to investors. Sara, after 30 years, Sara, 20 years, sorry, 20 years.
It's more than it's more than that.
Of doing this, can do things because she knows this has this impact on this, and consequently, she can write a document incredibly quickly. As you know, we started a company that automated the Form C business.
That's right.
And to put the entrepreneur in the driver's seat to make it more efficient and to still have it come out to be an institutional document. And we could not get entrepreneurs to complete the form. And the lesson is lawyers are valuable because they understand how to do this stuff very efficiently in a way that makes you, the client, look better because they know how to put it into a cohesive professional package that won't come back to bite you later on because there are all these nuances that Sara knows, having done this for a long time. So yes, that's the way I would start the conversation so people can understand contextually what we're trying to accomplish or what we thought we've accomplished. And yes, you need to do full due diligence and background on these early stage companies. That means mostly that's the cap table because the client has no idea how to put together a cap table. But it's also making sure that document properly accurately described, related party transactions are fleshed out, affiliated relationships, contingent liabilities, things that an investor would want to know about and will be aggravated about because it happens to me if they don't know about it. So that's what we do for a living.
All right, well, I want to get Jim in here because he's actually a broker dealer that has to go through this process. What do you do in your diligence process for issuers?
Sure. Well, first of all, right off the bat, we collect everyone's picture IDs, and we don't go as far as where do your children go to school, but we want to know enough information about them that we can put them through services and find information and clear them from OFAC checks or adverse media. The services out there now provide a lot more than just we check one list. So and we'll do Google searches, and we're going to throw the address in the search engine to make sure this isn't just in a strip mall, somewhere in Idaho, even though they're claiming to be from California. So we're looking around and we're speaking with these folks when, what to find out their goals. And most entrepreneurs, they want to get in, they want to file, and they want their money tomorrow. And, we have to explain that the process is going to take a little time because we do want to make sure that all the T's are crossed and I's are dotted. So we don't do a full background check, as far as we need DNA, but we definitely want to know who you are. We want to know who all the officers are, and we're not just looking at the first guy on the list. We're looking at everybody that they are going to list in their offering circular, and that's why we like to deal with, Sara and the lawyers here, because they're handling that, and it's clearer when it gets to us. So then things speed up, and we can get closer to, the time where we can get that offering launched.
Yeah, you don't want to blow an exemption. And I want to jump over to Nirvana here because you guys actually do some of that on your platform, and I believe it's largely automated, isn't it, Nirvana?
Yeah, that's true. That's true. And I think, one of the things that Jim mentioned there, and certainly Doug as well, is that, this industry is dependent not just on like the issuers and the offerings. It's also, you're dependent on the other parties, and do they have good processes in place? There's this whole notion of reasonable basis within the regulations. And so, you want to know, like, what's reasonable for Jim? Is it reasonable for us as well? And is it reasonable for Sara? And so having that confidence and trust in the other parties that are involved in an offering, I think that helps make all of our lives just a little bit easier.
Yes, it does. And I'm going to move on to the next topic because we got a lot to cover here. But I'm going to stick with you, Nirvana. Can you explain the investor limits for individuals in a Reg CF offering?
Sure. So, I mean, it's I would say it's not necessarily checked. There is like a lot of like self-certification for some of this, but really for non-accredited investors, you're looking for, max 5% of net worth for income under 100K, income over 100K, 10%, and then really max of 100K overall in the investment. So yes, there are limits for the non-accredited folks, but I think as we've discussed in some of our prior calls, just the whole notion of accreditation can be something as like self-certification, or you could actually receive a letter or something like that.
Do you guys do the accreditation, or do you Nirvana, you don't, but Jim, how do you do that really quickly?
We'll use third-party services, but if required, but for generally we'll go back to the investor first and say you can get it from your CPA, you can get it from your lawyer, your investment advisor. What we will do as a broker dealer, just because I don't want to collect tax documents or bank statements or brokerage statements from someone who's looking to invest. That could be a little intrusive beyond them providing me their social and date of birth so I can clear them. But if they do hold a Series 7 or a 65 or an 82, the rules have been recently updated to say if you are a holder of those licenses, you're automatically accredited investor. So magically, I became an accredited investor recently, which is amazing. So there's one that we will put my name on the line because I can clearly just run the Finra broker check and pop that person's name in and see their licenses and confirm it. If they, their CPA or lawyer or broker dealer is unwilling to do it, and we usually provide them with a quick form template letter that they can take to them, and it's a simple check, and here's my license, and they sign it and affirm it for them. If not, there are services out there that we can utilize to get them verified as an accredited investor.
Yeah, and I think there's several services out there that can facilitate this, and I think a lot of the platforms do that without giving anybody some free promotion. I think that there's just a couple of them, and it works pretty well. Just so everybody understands who's watching this webinar. In brief, an accredited investor is an individual who earns more than $200,000 a year. If you're married, it goes up to $300,000, or you have a net worth of $1 million plus, not counting your primary residence, but the SEC is discussing changing this. I don't know if we'll get to talk about that further at the end of the call, but it is of note and of interest. But if you are accredited, you can invest as much as you want. Go crazy. There are limits under Reg CF if you're not deemed accredited. But of course, talking to these people will help clear that up for you. I have a question about promotion. I want to do a question about promotion because Sara, you brought this up the other day, which I'm glad you did, but we've also had a question come up in the chat. So for Reg CF, can I go on Telegram, Twitter, TikTok? I can dance around on TikTok and say, do a rap to sell my security and tell everybody how great it is. Yes or no? Is that too much? I mean, does it kind of scare you, that thought? But what can we do? What can we do to promote these?
Sara, it's definitely too much if Andrew's dancing. Right?
Yeah. So
never seen me dance.
We'll exclude Andrew's dancing. Yeah, I mean, sometimes it does terrify me because, sometimes you don't have any control over this. But one of the things that we should emphasize is that the communications rules are both strict and they are completely different from CF than they are for A, than they are for 506C. And so we get into these debates with our clients who did a CF with us, and then now we're doing a Reg A, and we can get into what the rules are there. And they're like, yeah, but you told us, and you're making this up, right? And no, we're not. They're just very complex. So you can advertise in all sorts of places with respect to Reg CF. Bear in mind that the SEC's purpose in all of these rules is to get everybody the same information. Everybody should have enough information to make an informed investment decision, and they want all of the information to be in the same place, which is on the intermediary site. And so the way that the rules have worked out is you've got this sort of bifurcation. If you are going to mention the terms, and there are 6 terms, which are, and I'm going to forget some of them, the price, the amount you're offering, the type of security you're offering, how far you've gotten towards your goal, the termination date, and I've forgotten the 6th one. But any of those, if you are going to mention a term, then you have to communicate in the form of a limited, we call them terms tombstone, because it's just, date of birth, date of death. That's it. You can have a brief description of what the company does, but we are talking about, we make widgets in Ohio, not a half-hour infomercial. If you don't mention the terms, you can have a half hour of all of the things that made the company what it is and how you make all of these wonderful products or services, but you can't say what you're selling. In both cases, you are going to need to send the interested investors over to the website hosted by Rialto or whoever, which will have all of the information that the SEC wants you to know. And so you've got this content is moderated by reference to, it's the moderation of content. You can say these things or these things, but you can't say all of them. That being said, you can use whatever channel you like. Skywriting, sandwich boards, TV, if you can afford it. Most of our clients can't. Radio. This is all completely different than Reg A, which we will get to.
We'll get to here in a minute. Yeah, so I think in brief, be careful what you say. Talk to somebody before you say it. You don't want to cross that line and upset the federal government. Don't do that. You don't want to do that. I want to jump forward to the next question so I can get to it. I have lots of questions because this is helpful for me too. Secondary transactions. I've raised the money. I've got a security. Can I trade this security issued under Reg CF? Doug, is that something that I can do on day 1, on day 6, 10 years from now? Am I stuck? How do I, what's my exit path for this?
Can I just ask Sara to add a little bit about FINRA and the communications she just referenced? Because one's the federal standard by the SEC, but FINRA interprets that in their own way.
Oh, that's a really good point. So yes, on top of the the SEC's rules, you also have the Finra rules. And there aren't very many rules as far as they relate to crowdfunding portals. There are lots of rules as they relate to broker-dealers. But the one Finra will default to all the time is, standards of just dealing and equitable, that one, that you can't say things that are misleading. And it's an interesting difference between securities laws and FINRA's requirements. I mean, on the securities side, we're just looking to make sure that there's no misleading statements. But what FINRA's looking for when they look at these communications that are, facilitated by FINRA-regulated entities, they are looking for a fair and balanced presentation. That's a really good point from Doug, because we have seen FINRA get a little bit more involved in the crowdfunding area in general, which is a good thing, so long as we can agree with what they think is fair and balanced, right?
Okay. Yeah, fair and balanced, subjective, right? Subjective.
Just
Jim,
along those lines, and to segue back into the secondary marketing, questions we do get from investors in the Reg CF are just that: when can I sell this? Or why don't I see this listed in the newspaper, on Google Stocks so I can watch it? And you need to explain, one, beware, the risks are this could go to zero. So it's easy to start the conversation off to be fair and balanced if you throw the big one out right away. And they all are amazed when I do say that. They you can actually hear them go, what? And the air fall out, and you say it could, but it could also be, it could be bought out. It could go to a stock exchange. It could IPO. But I want you to be aware just what it says on page 1 of the offering circular. And some might even say the offering circular. And you go, yes, it's the 3 links we have above the invest button. Please take a look. So it's always helpful to be that wet blanket compliance guy and push them to that offering circular, and even point out sections, in it that might have the information that they're asking. Because myself, I'm not opining on the company. I let them know I checked them out, and from what we understand, they are real and these are their intentions, and there are no bad actors. I don't say that this product is going to be great and it's going to be the next thing. That's what the issuer is advertising and is up to.
So real is good, and early stage investments tend to be riskier. But that being said, back in the day, I've invested in publicly traded securities that have gone to zero. It happens. There's risk involved when you invest. That's a fact of life. That's any investment. It's just your degree of risk and your risk tolerance. So I think that everybody just needs to understand that. Yes, anything can go to zero. I want to stick on this secondary transaction thing for a second. First of all, Jim, you guys are working towards launching a secondary platform. I don't think it's quite there yet. Correct me if I'm wrong. But your intent is going forward is to facilitate liquidity for a traditionally illiquid asset class, correct?
I want to be careful about the word liquidity. Because to be honest, right now, liquidity in these securities, it's not like Google or IBM. Right. So when I like to throw the word out opportunity. There's the opportunity that you may find someone on the other side. Liquidity is dangerous, and I think that wouldn't be fair and balanced if I led with that statement for these markets. So. But yes, we have an ATS, or an alternative trading system, which is an exchange light, if I could use that phrase. And the idea would be to borrow the SEC's exchange term, to list securities, Reg A, Reg CF, Reg D, on our ATS, so that are freely tradable, where no restrictions left any longer, where individuals could trade these or match orders and sell or even buy something that they didn't get into when the Reg CF was being conducted.
So Reg CF, you have to hold it for a year? Is that how it works?
Is there also 180-day? There's
Sarah.
It's just it's a year. During that year, you can transfer the securities back to the company, to an accredited investor, to a family member on divorce or death, or that kind of thing. So there are some limited provisions for transferability. But just to be incredibly securities lawyer about these, unlike Reg D, these are not restricted securities. They just have restrictions on transfer. And if that makes sense to you, you are actually a securities lawyer.
No, it doesn't make sense to me. No, whatever. Nirvana, because you see everything. You see all. You know all. You kind of have. You're the guy behind the curtain. And I know you can't share everything that you see and know, but how do you see the secondary transaction market evolving over time?
Sure. I think it's important to have the framework in place. So at some point, there will be interest in some of these, especially if these companies start taking off and the investment starts looking like a good one. And so having the infrastructure in place, having these listed on ATSs, you'll start to see the counterparties come to those as time goes on. But I think at this point in time, it's important to just have them available and have them listed, have the ATSs perform a very valuable function within the market. We're not using the term liquidity, Jim, but in essence, it's there if and when it's needed.
Yeah. So basically, a path for an exit is it's a merger and acquisition, it's a public offering, or it's a secondary transaction, or the last is a bad outcome, which we don't need to talk about right now. I want to keep moving on this. So I've filed this, I've raised my money, I've issued the securities, and as an issuer, I don't have to file anything else with the SEC, do I, Doug? Or maybe I do.
You have an annual filing responsibility under Reg Crowdfunding.
Is everybody doing that now?
So the answer is no, unfortunately. And again, but that will hang those same issuers if they want to see secondary trading ever occur. The SEC doesn't allow you to have that ongoing privilege if you haven't been a responsible citizen and updated your information. So the answer is no, it's inadequate. People are very casual and cavalier about their compliance. I think that's why we're having this panel. So thank you for that. But I think, the mindset that both Nirvana and Jim were talking about is this is a private placement. Once you get past all the securities niceties, this is a private placement that happens to be conducted in a public way. And ultimately, the securities may be available for secondary transacting. Probably will not be, because even if you look at the low end of the public markets, most trading is by appointment only. And those are larger companies by and large than what we're talking about. But we collectively are trying to put, as Nirvana put it, the infrastructure in place so that people will have the opportunity for an outcome if they happen to have selected the appropriate investment that has the right profile.
There you have it. Okay. So with that being said, I know I have more questions, and I'm sure other people have more questions too about Reg CF, but we only have a limited amount of time. So I want to jump over to Reg A Plus. I'm going to start with you, Nirvana, because once again, you're the guy who sees all, knows all. Recently, we've seen an uptick in Reg A Plus offerings, and I would posit that is due in part to the increase from 50 million to 75 million, tier 2. But also, I think people are getting their sea legs. Am I wrong? What's going on that this is becoming a more popular security exemption?
Sure. I mean, there's even more than that. I mean, we certainly saw an increase since the beginning of the pandemic a couple of years ago as well. I mean, it was an additional way to access capital beyond PPP and other types of loans. It could be a lot cheaper way for a company to raise capital as well. So Reg A Plus has a nice advantage that the company can continue to raise funds and the securities are more freely tradable. And so I think that gives people a little bit of comfort to know that, okay, should I need to exit this, I can. And so it doesn't seem as restrictive. For companies, having the ability to raise even more money is advantageous without having to do multiple offerings. You can just have a single Reg A Plus tier 2 and call it a day. And so as long as you are willing as an issuer to do the extra work up front that it takes to go down the path of Reg A Plus, it seems like a really nice way for companies to raise money that's a lot cheaper than going through the more traditional VC path.
Okay, so I'm an issuer. I've decided I want to raise $75 million using the Reg A Plus securities exemption. And Sara, I know you've done like, one or two or maybe hundreds of these, right? I mean, this is very much wheelhouse for you. I have to create certain documents, primarily in offering circular. Tell me, what is in that document? What do I have to do to get this thing live? How long does it take? How intrusive or what type of information is in this document?
Yeah, well, I mean, a good point. It is a lot more intrusive than, say, a Reg CF, because there is an offering statement which consists of the offering circular, which is like a prospectus, the stuff about the company. But then a really important aspect of the offering statement for Reg A that doesn't exist in Reg CF is all of the things that have to be filed as exhibits. So you have to file all your material contracts, and that means anything that is the primary driver of your profits. So it could be that you have a license to produce a product. You're going to have to file that. And it's very difficult to take it. We have a lot of clients who are like, yeah, but that's private information. Well, yeah, but if the SEC, if this is a material contract, you're going to have to file it, and you can't redact stuff just because you don't want people to know it. This is a public filing, albeit of a private company. So one of the gating issues that we always say is work out what your material contracts are. So that's anything that is something you can't live without, not in the normal course of business, but something that absolutely drives what you do and you're substantially dependent on. Any of the contracts with your management, including what you pay them and how much you pay them and all of that stuff. And make sure that you are okay with filing those, because those are going into the public record. Then the other things that need to be included as exhibits include opinion of counsel saying whatever it is you're selling were actually created. I wish this existed in Reg CF, to be honest, because we do see some occasions when a company is selling something it has not actually created.
It's imaginary.
Yes, yes. It's like, well, we intended it to exist. Right? Yeah. So you're going to have an opinion of counsel to say these things actually exist. And then other information like the agreement with the escrow agent. So you've got the agreement with Prime, you've got the agreement with the broker, which is the agreement with Rialto. All of that gets filed with the SEC. And the SEC, in normal circumstances, reviews all of it. And also, by the way, the SEC does actually have access to the internet. So they'll do an internet search and they will look at your website for all of this nonsense that you've put on the website. Invest in our securities and make a fortune. They are looking at that too. And they're cross-referencing. So if you've got something described in your offering circular that is not consistent with what's in your certificate of incorporation, they're going to pick it up and make a comment about it. Now, that's the normal circumstance. At the moment, we're seeing a lot of no reviews because they are so busy taking care of all of Doug's SPACs that they don't have time, because he's like the king of SPACs. And so they don't have so much time for Reg A. So anything that does not look suspicious, you might get a no review. But if they review that, they're going through the whole process and they are cross-referencing all of the documents.
So it's almost like a registration statement.
It is. It's registration light. I mean, from my old days doing, multi-billion dollar IPOs, you'd get hundreds of comments. It's much scaled down from that. They are taking a much lighter touch, but it's the same thing, but light.
And how long does this take? Are we talking weeks, months, years?
More like months. Yeah. We usually say, if you leave 5 months, then you'll have a comfortable cushion. It'll be less if they give you a no review. But it's a process, and you've got to let that process go through. And you cannot pick up the phone and say, hey, we filed 6 weeks ago. What you doing there? They do not like that.
So okay, so there's tier 1, there's tier 2. I've mentioned tier 2. Doug,
do
can you
tier
share? So Sarah says don't do tier 1. There are some issuers that do that. I mean, respectable issuers. I'm not going to mention any names, but Doug, what's the difference between tier 1 and tier 2? Why would you do one versus the other? What are the pros and cons here?
I'm going to leave that to Sarah. She's got the technicalities on these. I've lost track of one. My recollection, Sarah, is it doesn't preempt, and you have to qualify in each state by coordination. It's a lesser amount of money, but you get away with not having to have audited financials, right?
That's right, at least at the federal level. But the reason I say don't do tier 1 is, the feds don't require audited financials, but you have to go through the individual requirements of each state, many of which states do have requirements for audited financials. And they may also have requirements like you have to be selling preferred, not common, because they want a greater degree of protection. And there are some states who we have had frank conversations with, and there's one reason we do not do tier 1 ever. We've had conversations with them that basically consisted of, you are not ever going to get this filing through. Just give up. I mean, because there are some states who will take the view that, say, Massachusetts did back in the days of Apple's IPO, and look at this and go, this is far too risky for our people. We are not going to let them, we're going to protect them from this terrible company. So really, tier 1 works for established companies that have hard assets, preferably companies selling in a limited number of states. Real estate companies do fairly well out of this, but for a startup, just don't even start down that road.
Skip it. It's not worth it. Jim, are you guys looking at doing tier 1, tier 2, or are you just focusing only?
To be honest, one issuer has come to us to mention it, and going through just the reviews for Finra, when as a broker dealer, when we bring on a Reg A, I couldn't imagine having to go through 50 qualifications. And so I would think any 5-month process. So unless you had one state where you knew you had a handful of investors, and at that point, just do a Reg D, because if you have those investors, like it sounds like it's less work, but in the end, it's going to be more. So we haven't done any tier 1s, and the one that came to us, I did kind of try to talk them out off that ledge as well. Because while the SEC, like Sarah was saying, is reviewing that qualification, as the broker dealer who's going to be put on that offering circular, we need to get our review passed or no objection by Finra. And Finra is also looking at that offering as well. We get comments at times that say, the offering circular is missing this piece, and along the lines of everything matching up, like Sarah said, the agreement that we have needs to be in place with that offering, and it all has to triangulate with what we file in the Finra form of who we are, what we're doing. Finra is not just looking to make sure that we're charging an excessive commission. They're also looking for disclosures to make sure that the offering circular also meets the requirements of Rule 5210 and how 5210. There's a lot in there. I won't go through
because there's a lot of nuance there. I always default to ask your attorney, make sure you hire a good one that knows what they're doing. Nirvana, you touched on this before, so I'm going to circle back around to you about this again. One of the key aspects of Reg A Plus is secondary transactions. You can actually issue the security and trade it on an exchange or an ATS almost immediately. Are you seeing a lot of this? How does that work? Benefits are liquidity. Tell me.
Liquidity, the word that we shall not mention, but we actually mean liquidity. I'd actually have to defer to Jim as the ATS. I think our role within the space is really just to kind of like hold the assets as a custodian. So I would defer to Jim to say how much activity he's actually seeing with Reg A's.
Yeah, along those lines, I can say that we've built our ATS. We're just not live yet because we're looking for a little bigger mass to make this work. So there's also the issue where an issuer who just issued shares in his Reg A company and still has an offering going on may not be so keen just yet for folks to be out there and start trading the security, as that could definitely be go against the price that they're still offering the securities at. So, and right now we're looking for the issuer to be the one to say, I'd like this to be on an ATS, and we'd need their buy-in, to put that stock up there. So, today we're not seeing a flurry of it. There's a lot of conversation, and they're curious about it, and they realize this: if there's an exit ramp mentioned or disclosed as a possibility up front, it helps the investor to know, okay, that there is a solid fourth option for a way to exit this opportunity if I need to. So we're looking for it to ramp up, and the conversation is certainly growing.
Yeah, and I would have to mention that I think recently I've seen a few interesting issuers that have immediately traded shares on an exchange. I think when it first came out, there was kind of a rush to do it, but then then everybody kind of pumped the brakes a little bit, said, wait a minute, we need to figure this out a little bit. And so that appears to me from an outsider is what's going on as people really figure out the ecosystem, how to best manage it. And I think that's what we're seeing right now. One more thing about Reg A Plus before I move on to Reg D, because we don't have a lot of time here. Sara, one of your favorite topics, promoting Reg A Plus. Can I dance on TikTok to get people to buy this security, or is that something that I shouldn't do or nobody should do?
Well, again, with we're not going to have you dancing, but if you want to do a TikTok dance, you can. But the interesting thing about Reg A is, as I said, unlike Reg CF is whether you mention terms or you don't mention the terms is dispositive. With Reg A, what is really important is, are you pre-qualification? Are you post-qualification? Because if you're pre-qualification, and again, to bearing in mind Doug's point of if there is a broker involved, then you need to make sure that the communication is not is fair and balanced, as well as from the point of view of the SEC's rules, not misleading. You just include a disclaimer, basically a legend that says, we're not taking any money yet. We have made a filing with the SEC. This is where you can get the filing. So pre-qualification, you can do TikTok, you can do Instagram, you can do anything online. You can also do TV, radio, Wall Street Journal. But you can't take money, so they're kind of pointless at that point. Post-qualification, the only way you can make such a communication, which is an offer of securities, is if you have delivered the offering circular to the investor that you are targeting previously, or you're delivering it contemporaneously therewith, which means TV doesn't work. Radio doesn't work. The Wall Street Journal doesn't even work. You've got to have some method of delivering the offering circular. So you're really talking about a live clickable link online, and that has to take the reader straight to the offering circular. And so this has led to a whole bunch of questions over the years. Everybody's like, yeah, but these days you could have a QR code on the TV and you could point your phone at it and you get the offering circular right there on your phone. And the SEC in the most recent round of concept releases said, should we do that QR thing? And everybody who commented is like, yes, absolutely, do it. And then they didn't. And we were so sad. So no TV.
Sadness. Yes. Go ahead.
So Sara, this is not new, right? This has been around for quite some time now, and you and I sat through a lot of discussion where there was a lot of concern on just the use of social media, generally speaking. And while I hear some things on Bloomberg News, I get a little bit of solicitation through LinkedIn. I question how effective any of it is, actually, even though it's inexpensive. But I just really haven't seen it being utilized for the most part tactically in a very productive way. I'm sure there are examples of it, but for the most part, are your clients using it, and are you seeing it, and is it effective?
It's across the board, actually. I mean, this is very much it depends on the individual company. If you are dealing with a client whose CEO is a legit rock star and he has a huge following on Instagram, then you might want to use Instagram. However, if you're dealing with a client who is a medical devices company, social media is not really going to work for them. They need to find their tribe somewhere else. They need to, reach out to the people who need that particular service. So it's really horses for courses. And the one thing I will say is, as a lawyer, I am completely useless at predicting how marketing is going to work, because I've looked at some offerings and go, that's really going to do well, and then it doesn't, and then something else does. So you want to talk to marketing people who are true experts and who can, as you say, Doug, show that they actually had success in the particular thing that they are recommending. Because social media is not for everybody.
Yeah, it's magic. So we have a few more minutes. I want to jump over to Reg D very quickly because in many respects, Reg D is the simplest exemption, but it's also the largest. Nirvana, can you give me perspective when I say that Reg D is the largest? I believe that Reg D is much of your business today, but it's an enormous market, isn't it?
Unlimited offering size. I mean, you start saying that there are no restrictions on that in terms of also the amount of information that you have to disclose and reporting that you have to do. Yeah, I think that's probably attractive for a lot of companies to want to go down that route. Certainly there are restrictions on who investors can be, but yeah, I think that's the reason why Reg D is appealing for a lot of companies.
Now there's Reg D 506C and Reg D 506B, B being old Reg D, I guess. What's the difference between the two? Nirvana, you want to share that with me?
I'd actually probably have to defer to Sara. I'm sure she deals with this a lot more.
I'm going to jump over to Jim. I'm going to give Jim because I know he wants to talk about this.
No, sure. C is just you. It's public. You're able to publicly offer, and let people know about it. At that point, though, before you start showing the actual details and the information, you want to know who that client is and not qualify, but make sure they meet the requirements, they're accredited before you'd accept their funds. So there B, you can't just blast it out or go on social media, but C's it gives it a little more leeway so you can make some noise and draw some folks to it.
And from my point of view, one of the reasons why Reg D is interesting for online capital formation is because you can do a simultaneous offering, you pairing Reg CF to Reg D 506C, Sara, and I think we've seen a lot of these. Am I correct?
A lot of the D's or the
the
B's or the
side
C's.
by side.
Oh, side by side. Yeah. It used to be when of course, as we discussed earlier, Reg CF used to be limited to 1 million, and there was a lot of overflow. What all of the platforms would do in that circumstances, go find out who among those were accredited, and turn that into a side-by-side Reg CF, Reg D offering. But we do see a lot of side-by-side. I think it's less now. I'm not sure if anybody's keeping data on this. I think now that the CF's gone up to 5, I don't think you see as many, but it is a thing that is fairly easy to do. So it's there if you need it.
And if I could just add in there, depending on the issuer, some issuers are looking for the groundswell of retail to build their brand along with this offering. So if they have a following and people are excited, it's you might not want to cap out or keep your retail folks from joining the fun and being part of the brand and the big ride. So if you have the larger checks, it makes sense to do the Reg D as well on the side and not fill up your crowdfunding so that you can still get those larger checks and get the money you need to do what you do, but at the same time keep your brand building and get the groundswell and noise up.
Deal terms don't have to be the same too, right? If you're doing a Reg D in a CF. So that's
conflicting about the information that would be in an offering circular, or, you certainly shouldn't say, in one we make this and the other we make that. Things have to be, but those are little simple things that could get tripped up if you don't have the right eyes looking at all these things and comparing and contrasting.
And so, Doug, go ahead.
Well, just to be careful, Andrew, I mean, you do have a corporate law issue there. You cannot issue the same securities effectively at different prices at the same time under corporate law. So you do have to be careful there. And I'd also just point out, you can do a 506C with a Reg CF, but you can't do, if somebody happens to have institutional 506B money at the same time as doing a Reg CF, you can close the 506B first and then do the 506, the Reg CF, and that's okay. Again, it's a lot for people to digest. I get that. Speak to Sara.
Yeah. And so I think one of the best things about doing a Reg D is what you have to file with the SEC. That always kind of flips me out because, correct me if I'm wrong, Doug, but all you have to do is you have to file like a one-pager effectively 2 weeks after you take your first money, and then you're done, right?
But you have to remember, you're selling to people that the regulators are not concerned about. They are accredited investors. And so it's less sensitive. It's when you're selling to retail investors, more information and more regulations apply. So 506B has always said accredited investors, institutional investors can fend for themselves. And if you just want to file the Form D, as you're pointing out, and you don't even want to offer them an offering circular or any disclosure, as long as you're not violating anti-fraud laws, you're okay. Real estate guys have been doing that and gals for generations on, small shopping. What's the word I'm looking for? Shopping, the real estate place. Anyway, so you just don't, that's why it's so little. But the last thing, just to point out to folks, Reg A plus expensive, time consuming, because you're going to retail investors through a regulatory process. 506B and C, less expensive, very inexpensive, less paperwork because you're selling to accredited investors. And then Reg CF is modestly expensive for considering you're selling to retail investors.
Okay, so I have one more question before we open it up for other people to ask questions. We've actually had a few good ones come in. Nirvana, can you just comment on the difference between fraud and failure, because those are two distinctly different concepts, but they also represent two just different types of risk. Can you share your thoughts on that?
Sure. I mean, as we talked about earlier, any investment can go to zero. So like failure is always an option, even in the public securities market. So that needs to be aware. But are we doing our part to protect investors from misleading statements? Are we all forming the same kind of reasonable basis that each of the parties are making the disclosures that they need to, that we are running all of the appropriate checks and not just letting things kind of come in the door? I think one of the important things that I mentioned earlier is actually doing diligence on the other parties, not necessarily the issuer and directors and executives and things like that, but actually just asking questions beyond what is actually required in the regulations. And so for a portal, I want to know how frequently are they actually turning away offerings? Are they letting everything in through the door, or are they actually turning things away? That's good. It's informative of a process. So I think we also saw with the more recent enforcement action at the end of last year that there's an expectation from the SEC that the participants in this space, namely portals, they're the gatekeepers. They need to be vigilant for fraud and misleading statements and all of the things that aren't necessarily part of the forms and publicly available. And I think that's especially important to protect investors. Is you're privy to a lot of information that may not necessarily be disclosed, and so it's important to I guess vet all of the offerings, the issuers and the related parties, to go beyond the bad actor check to make sure that everything does check out and it passes the smell test, if you will, before something actually gets listed.
Okay, so we got a few questions here. I think some of these we've already answered, but I'm going to jump over to questions right now. And I'm going to start with somebody asked about when you do an offering, who owns the data of that offering? And I would assume the data would be like email addresses and other information. And this may be platform specific. And I'd like to mention that Jim, you're actually a broker dealer. You're not a funding portal. You could be a funding portal and broker dealer, operate a broker dealer, but you're a broker dealer. So, you know, that's who you guys are. But can you talk about who owns the data?
Well, yes, when it comes to a CF, since we're the intermediary and we control and maintain the website and we're verifying investors, we need to make sure that they're not exceeding their limits for the year investing through us. I'm going to consider that as I own the data because I need to know who that client is. So I need to know their name, beyond their personal, how much they've invested and in what security. So for a CF that we're facilitating, I'll say I own the data. For a Reg A, maybe I don't own the data, even though I'm charged with validating all these investors and accepting their money. And I still have to email these investors if there's a problem with an application. So I'm privy to that data, but I won't use that information from a Reg A to just say, hey, I've built a network of investors at this time. Not without having that person understand that they came to me and worked with me. Also, when it comes to the data, sometimes the data the issuers are interested in is who came to the sites and where did they come from. And now that kind of data, the marketing data, that is always the issuers in our mind. We don't need to own it. We're more than happy to pass along those types of analytics and things so that they can retool and fine tune their marketing efforts. But for a Reg CF, because it's like a portal where we need to know who that investor is. I don't want to say more intimately. That's a little awkward, but I said it. I'm going to say we do own that data for the CF, not as much for the A,
including the email addresses, because I know that touch point is
for Reg CF. I know your date of birth and social security number.
Okay.
Your email address is important so I can find you and call you and contact you if anything comes up. Sometimes,
but the issuer would get copies of those too because you need to be in contact.
The issuer is going to have it. Sure. The issuer is not going to have their date of birth, but the issuer is going to have that email address and name because the cap table needs to be complete. And at the end of the day, that cap table and all that information is there. So.
Okay. So I think somebody asked about cost, and I know that gets to be a little bit dicey, trying to nail down exact cost to do a CF or an A plus. And, correct me if I'm wrong, but it's my kind of understanding that if you're doing a tier 2 A plus and you're going with a big law firm that has done maybe one or two of these, you may be spending a lot of money as opposed to going to a firm or a CrowdCheck that specializes in these where you will pay less. Is that true or false? Anybody?
Certainly true from our point of view.
Well, but there's another variable there, Andrew, and so you have to be careful. If there's a broker-dealer involved that's treating it as an IPO, it's going to be more expensive because underwriters or placement agent counselors are going to have their own counsel. So Sara does it incredibly effectively and efficiently in a smaller firm environment. Large firms are going to charge multiples of that and have and get it, and to my amazement, but they do. But Sara's firm does a great job doing it at a much less expensive price point.
So, since you bring this up, there's a lot of offerings that EGS does where you've created one and you use it again and again and again and again. I would assume that's pretty efficient.
It can be. I mean, for we have certain Reg A plus offerings that are what I call darts. They are tracking stocks, and you can supplement it over and over again. And yes, so it ends up being less expensive in that regard, but the overall process is still is more expensive.
And for a CF offering, I would say once again, if you're going to a specialist, it's going to cost you less as opposed to going to big law that's not used to doing these. Whereas a CF will be maybe thousands of dollars, not counting the accounting and some of these other things. Is that accurate? Anybody?
It is unfair to Sara for what clients are getting away with paying her. For her.
Yeah.
Okay.
But I will say we get a lot of referrals from big law when their clients want to do these teeny tiny little offerings in their minds because they're terrified of this thing. Yeah. Yeah.
Somebody asked about NFTs and forthcoming regulation, and I'm going to bring this up because it's something we were just talking about. And when I look at these offerings, in my opinion, if you're falling under securities law, you have to file for an exemption, pretty much. Does anybody want to, comment on that?
I'll take a shot at it. And I will flap my lips the way I did during the ICO scandals. Many NFTs, not all NFTs, are a security. And what people need to do if you are playing in that space is either have a very large risk tolerance, read the case called Gary Plastics. And if Gary Plastics doesn't put hair on the back of your neck, then you have a high risk tolerance. But the SEC will wake up at some point in time, as they do and have been known to do, and certain NFT issuers will have a lot of explaining to do, as will the platforms that sell them. That's not to say I'm anti-NFT. I'm very pro-NFT. But I do believe if you are raising money from investors like we're talking about in reg crowdfunding, you need to comply.
Okay. Nirvana, somebody asked a question about how the SEC and Finra, they're dealing with ATSs. Do you have any perspective on that? I know that there was a period there where there were a lot of people that were applying to become an ATS and nobody was being approved. It was like somebody decided not to do it or ignore it. Do you have any perspective on that?
The ebbs and flows of approvals, I think that has kind of like always existed with a number of different types of entities. But I mean, realistically, you need to be a broker dealer, and then you need to file an additional form and go through that process. I mean, Jim can certainly speak to what that actually looks like in practice. But yeah, I mean, like realistically, we see new ATSs come. There's a published list that anyone can go check and see what's happening. There was certainly a flurry, but I mean, Jim, anything to add there?
Before the process started of registering our ATS, my hair actually looked like Nirvana's. But since then,
I believe you.
It's a lengthy process, and like you said, you have to be the broker dealer first. And then it's probably quicker and easier to market if you want to be an ATS for NMS stocks right now. The private ones were what is really attached to this whole thing is securities issued digitally. So, if any of these Reg CF securities or Reg A securities were going to be issued as a token, and that's where I think the pause and everyone was worried, and that's where they stopped and issuing the licenses or granting approval to operate. I want to say it correctly, granting the approval to operate an ATS that has the digital securities, because they're just worries about who's going to custody these. How do we know they're real, and how does someone not steal someone's thumb drive that had 50 shares of ABC Corp issued as the digital security? So that's where I think the just to split the hair there for to be an ATS. If you got your paperwork in order and you're a broker dealer and you want to trade Apple on your ATS, I'm pretty sure the line to or the wait to get approval wouldn't be as long.
Yes. Okay. So we're really out of time. We've gone way beyond. I have still lots of questions, but I'm going to have to hold them for a later date. I'm going to go around the room very quickly for any parting thoughts or something you want to share very quickly that we may have missed. I'm going to start with Sara. Anything you want to say, words of wisdom?
Yeah, I would just keep an eye on the SEC. They're clearly working on some kind of rulemaking that could affect the nature of accredited investors and private companies, and also hopefully going to work on something about crypto.
Absolutely agree. Doug?
Reg crowdfunding and the Jobs Act generally has proven itself out and in an exemplary sort of way, notwithstanding some compliance failings, and the SEC willing to be flexible and not take it out on folks for their deficiencies. And so overall, I think you will see the next 5 years have the broader crowdfunding movement move much more meaningfully into the venture space.
I agree too. Jim?
Maybe just because I'm the compliance guy, this is my line, but you know, some of these compliance, they sound mind-boggling or difficult, and guys who are issuers, sorry, don't feel they want to or need to, but think of it always from the other side. This actually lends reality and I forget the word I'm looking for, but it makes your offering more real, more it's
credible.
You know, handled by a regulated company, so other people that are regulated, that everyone's hand is in the drawer. So when there's a lot more people that can get in trouble just for helping you out, and they're doing the work, that's important. So do what your parents tell you, kind of thing, you know.
Makes sense to me. Nirvana, tell me.
Sure. I just think everyone should keep their eyes out on the SEC and what they will actually say about again, passing the smell test. Are things reasonable? Does it make sense for an offering to say have 99% Russian investors? Probably not today, but realistically, those are things that are going to be pushed more and more towards all of us that are in the space. And we need to be prepared to look at that information and vet it before it actually goes through.
Awesome. So first of all, I want to thank the four of you. You guys are amazing. You are the experts. Thank you for sharing your wisdom with us. I want to thank our sponsors, Prime Trust, Rialto Markets, and Dalmore Group. You help keep the lights on. And I want to let everybody know that this will be recorded and it will be posted elsewhere if you want to go back and review or share with your friends. And I thank everybody for joining us today to learn more about compliance and securities crowdfunding offerings. Thank you very much. Have a good rest of the week. Take care.
Thanks, Andrew.
Thanks.
Thank you.
Thank you.